Tax. How much tax are you going to be paying as a buy-to-let property investor? Watch this video as I go through all of the basic elements of tax that you need to look out for and reduce. Hi everyone, my name is Simon Mishevich from Optimised Accountants. I'm here to help you grow your business whilst reducing your tax liability. And in this session, I'm going to be focusing on how much tax you are likely to pay in your buy-to-let business. It's a very good overview, so stay tuned for all the details. Whenever you're buying a property, you need to think about different types of tax. The first one is stamp duty and land tax when you're purchasing a property. You may then move on to refurbishing that property, and the materials and labour may have a VAT bill, which you don't know about. You've also got the profits on the property you make, so you've got income tax and corporation tax to pay. And we haven't finished there with capital gains tax on the disposal of that property, and eventually you could get into inheritance tax issues as well. We are not going to worry about the inheritance tax for this video because that's another subject all on its own. What we are going to focus on though is the first few. Let's imagine that we have a property for £250,000. We have a deposit for £62,500. The rest is in a mortgage, and we've got refurbishment costs of £20,000. How much tax do you pay and what type? Well, let's go and have a look. The first thing I would like to bring to your attention is the stamp duty land tax. There is a stamp duty land tax for you and me buying a home, but we also have a different rate for buy-to-let properties, which is the 3% SDLT surcharge. So if we are buying a property for £250,000, you will notice that there is an SDLT liability of £10,000. It is important to challenge your solicitor, conveyancing solicitor, to make sure that the right amount of tax is paid at the right time, because you are allowed to pay SDLT 14 days, not immediately. But most solicitors prefer you to pay straight away. And then we move on to the subject of, well, is it the right amount? With our help, you can reduce your stamp duty land tax instead of £10,000 to a measly £2,000 if you buy certain types of property, or indeed intention is such a key thing here. You may even avoid SDLT altogether. So it is important for you to get a property tax specialist when you're going into the game of buy-to-lets. You've also got 20% VAT. Now, if you are doing a £20,000 refurb and not realising that there's VAT to pay, all of a sudden you could be hit with a 20% tax bill and a £4,000 liability. Now that your refurbishment cost has just gone from £20,000 to £24,000. So again, you do need to think about VAT. This is whereby working with a property tax specialist can help you, because there are certain elements of works which may be reduced from 20% down to 5%, or down even further to 0%, which if you look at the refurbishment cost, you can either save £3,000 in VAT, which is a lot of money, or you can reduce that VAT liability to zero, which basically means that you save £4,000 on your refurbishment costs. It's a lot of money to save using a property tax specialist. And once you started to get going on your property journey, you are going to generate a rental profit. In this example here, you might have a property at £500, you've got the letting agency fees, and you might have a repair cost. That £350 in a particular month will be subject to income tax, but how much? We need to have a look at the income tax rates as well. So this is income tax is split into 3 different bands. This may be obtained from HMRC, so do check that page out for income tax rates, but ultimately I'm going to share that information with you here. So you don't have to pay tax on anything at all if you've got £0 to £12,500 worth of profit on your property income. Now bear in mind, this is assuming you have no other form of income at all. So you do need to work with your accountant to say how much in total is my income and how much tax will I have to pay. Your basic rate tax band starts from £12,501 all the way up to £50,000. which is quite a lot of money really. Especially if you're a couple, you could earn up to £100,000 and not have to pay any high rates tax. And this is the big question that most people say is, well, should I use a limited company? And my answer to that question really does depend on what you are doing now and what you will be doing in 5 years' time, rather than just taking snapshots of where you are now. And then you don't start to pay the high rates of tax until you go to the £50,000 or one up to £150,000. So you pay 40%. Now that's where we are going to stop with the example. There is another tax band for people that earn up to above £150,000, and that's a 45% income tax band rate. So we're just going to focus on the no tax, basic rate and high rate tax, but you need to add on another 5% if you are indeed an additional rate taxpayer. So here what we are going to say is, well, hold on, then once we've made the profits itself, what then? Well, you might sell the property and you could make £26,000 worth of profit, but then there's another form of tax that you need to be aware of, which is capital gains tax. And again, if you have no taxable income, then it's going to be at 0%. If you're a basic rate taxpayer, you will pay 18% on the profits that you make on that disposal. And if you're in a high rate or an additional rate taxpayer, you pay 28% capital gains tax liability as well. Please note that this example that we're showing here does not assume or take into account the capital gains tax annual allowances or any other forms of relief. It is pretty much a snapshot of how much tax you are likely to pay if you have other disposals going on. The tax.